Well, there's no taking away from the fact that the focus remains on renewable energy and as opposed to coal. Currently, at this point in time, when it comes to emerging economies like India, there is that much more reliance. But is it likely to come down? And this kind of decline that we're seeing in crude oil prices, will it sustain or not, is the big question to answer. For that, let's turn to Viktor Kantona, who's the lead crude analyst at Kpler. And along with Viktor, we have Amrita Sen joining us, founder and director of research at Energyaspects. Thank you very much both for joining us. Coming to you first, Amrita, we are looking at what one expert who we were speaking to earlier talk about the management of a crisis situation when it comes to crude oil. Do you see it as such?
I mean, look, yeah, I think he was right in talking about a global economy that is clearly not doing very well. And we are in a situation where what oil prices are reflecting is very much concerns about the macro, right? But what we have seen in the decline, or the reasons for the decline in crude oil, has actually nothing to do with fundamentals. Fundamentals haven't really shifted very much. In fact, it has been a huge momentum around high frequency traders called CTAs. They've been selling quite aggressively in the market because they've had some technical triggers. And that's why we have seen the kind of aggressive sell-off that we have this week. Overall, I mean, OPEC cuts don't kick in till next month. We still are in refinery turnarounds, but what is very interesting is that global inventories for crude oil are actually drawing counter seasonally, which started from March. So I think there is a disconnect between the physical and the paper trading that's been going on right now, and very much driven by concerns about the global economy. So yeah, there is definitely a management in that sense of the market vis-a-vis what's going on in the world economy.
What's your sense as far as the demand-supply situation on crude oil is concerned, especially after the October 2022, we've seen that OPEC Plus members, they agreed to that that production cut of 2 million barrels a day. It marked the largest reduction in oil production since the pandemic. So from that point onwards, as far as crude oil prices are concerned, what's the trend that you've noticed when it comes to demand and supply? How are we?
I think we're in the situation. Sorry.
Go ahead, Viktor.
Yeah, I think we're in a situation where supply and demand are really forgotten, and people no longer take notice of what's going on in that specific instance. I mean, if we are to be completely objective, the decreases in oil prices that are happening right now just makes no sense. We're heading into the summer season, which should be peak demand season by any means. We're heading into a summer season with OPEC Plus production cuts, very low inventories, and basically demand, which is still intact, even in countries like the US, which we expect to be in a slight recession over the course of 2023. You actually see gasoline consumption being exactly the same as it was last year. So we have a lot of fears about the future, but no one is actually paying attention to what is going on right now. And right now we have more demand, less supply, and very superficial interest in the overall supply and demand balance. So I think overall, what we have to kind of wait out is this superficial fear that the bad macroeconomic news which we just keep on getting. I mean, it's inevitable that we get them, but ultimately we need to wait them out and see the actual physicality, the actual materialization of the supply demand balance. Which I'm telling you, in the summer it will be very evident that people have not been paying attention, and the strength is still there. It will be evaporating later on, but the strength right now is very much physical.
Seems to be. So, Amrita, how do you think these prices are going to pan out from this point onwards? We've seen this kind of decline, this kind of pressure come in on crude oil prices. But what's the road ahead, do you think, as far as volatility is concerned? How much more should we expect?
I think it will be volatile for sure. And to your question about supply and demand, I mean, I do agree with Viktor. The physical market is strong. And like I was saying, we are drawing stocks counter seasonally. That doesn't mean oil prices will go up anytime soon. I think this quarter in particular, with all the macro headwinds, you're probably going to get prices remain range bound around $80, right? Trading in the 70s, trading in the low 80s for Brent Crude. Second half of the year, we are expecting crude prices to go above $100 per barrel because we have massive stock draws, right? The OPEC Plus cuts, Plus, just generally, China's reopening is extremely bullish. I mean, Chinese demand was roaring in March, the latest data point that we have. India is doing very, very well. So even with growth, in fact, we have declines in the US and European oil demand figures for our forecast. Even with that, global oil demand should increase by at least 1.5 million barrels per day, right? So the market is going to tighten, and we are forecasting $100 plus, but it is going to take some time for that to materialize, given the macro headwinds that we're seeing right now.
Fair enough. Do you agree with that perspective, Viktor, as far as the kind of price movements we are likely to see in the crude oil market from this point onwards? Which are the biggest factors that are going to come into play that will determine the course, as it were?
I agree that over the upcoming weeks, don't expect anything radical. Expect range-bound trades. Whenever something positive happens, it will be slapped back by another piece of macroeconomic news. I would just add to what Amrita has said one thing, and that is that the market has kind of lost trust in OPEC Plus being a reliable provider of information, because they say OPEC production cuts. But then you look into the actual exports that Saudi Arabia is exporting, and you don't really see them. Russia has been, continuing this narrative that they are cutting 500,000 barrels per day. The market is still awash with Russian crude and products. So I think partially the lack of a more drastic response to kind of the supply and demand disbalance that we see is actual lack of trust in the narratives that float around. And regrettably, we right now, we just have so many of them that oftentimes people just don't know what is true and act based on kind of a fractal and I mean, not complete information. And regrettably, this is the end result that we're seeing.
Bringing it down to India, and let me take this across to Amrita. You know, I was looking at a report where it is quite clear that India has been a big buyer of Russian oil since the invasion of Ukraine, and we've made no bones about this. So as far as emerging markets like India is concerned, there are these inflationary concerns. Now we're talking about how the softening of commodity prices, especially of crude oil, is going to be a net positive as far as the economy is concerned. Do you think that in the long run, the kind of prices that we are looking at are going to be beneficial as far as India is concerned and help the inflation story and the easing of inflation in this part of the world?
I think great question. Look, I think India, China, they've both benefited from taking more Russian oil. I'd say, Russian oil going into China, probably about 2.3 million barrels per day. India's about 1.7, excluding CPC, right? Of course, if you include CPC, that's a higher number. And I think what has happened with the Russian flows going east is that the East has actually benefited from kind of a disinflationary impetus, right? Because Russian crude lands into India and China at a pretty decent discount, even after adjusting for what the middlemen take. I think that's been at a sharp contrast with the West, where very high energy prices have been massively crippling and very, very inflationary. So in the short term, with generally gas prices in particular, but oil prices also coming off globally, at least energy will not be the driver of inflation. Doesn't mean housing and other wage-related growths are not a driver of inflation. For instance, the UK print for inflation was still above 10%, and it had nothing to do with energy in the last month, right? So there are other issues in the West, such as just generally the lack of labor, right, which India is not going to face. Medium term, though, I think what His Excellency Haitham Al-Ghais says today, and I spoke to him yesterday and this morning as well about this very issue, I don't think medium-term oil prices are going to be low. The lack of investment in oil is very, very critical. And, the more we talk about EVs and the more we talk about renewables, we are taking away from investment. So I think India, China, and emerging markets, or some emerging markets, will benefit from some discounts. But overall, the price level will still be high and probably get even higher once we are through this kind of macro slowdown period, because ultimately supply is running way, way behind demand.
We'll have to see the kind of role that renewables play and whether a lot of the investments that are going into crude at this point in time, a lot of that would get directed towards renewables, especially in countries like India and China, which is certainly a growing trend. But how much of that is going to impact crude oil prices, that remains to be seen. But like our experts are pointing out, that for the time being, when you have global demand not really shaping up the way that would benefit crude oil prices on the upward trajectory, till that point onwards, we can definitely, after that period ends, we can expect these prices to go up. Viktor and Amrita, thank you very much for joining us with your perspective on this. Great to have you on India Tonight.